What's good, family? It is July 1st. Just want to go over some charts with you and going through so much life is just life and for real. Um, Good ways and bad ways. I figured I'd record calls and drop them in the chat, just to make it easier and more convenient for all of us. So, we're gonna start with gold. And I'm gonna erase all this stuff so it can be fresh and you can see exactly what I saw this rising and also what I'm looking for when I look at the charts. All right. So boom. Currently gold is consolidating between on a smaller time frame. Between the prices of 23.40 and around like 22.90-ish on a 4-hour time frame. On a smaller scale, on the 1 hour, we're looking at around 23.38, 23.18-ish. I rounded up to 23.40, 23.20. So we can say the market is kind of consolidating in this area. Even though we were able to catch a ride down. Well, I was not sure everyone else, but I was able to catch a ride down for the sell this rising. I clearly saw that more than likely when it got to my green line to go ahead and get out because it was going to go back because the market is moving sideways, to be honest. So the market moves sideways doesn't mean you can't make any money. You just got to understand when to get in and when to get out. So, first things first, when you see the market at its low during consolidation, you want to buy it. When you see the market is close to the high on whatever time frame you're trading in, you want to close that buy and then enter the sell. And if we back test it, we can see how many times we could have did this during this consolidation period. So here we go. So we got a buy here, sell here, a buy here, and a sell here. So what's that? 4 times money could have been made and to buy again. So that's 5 times that you could have made money buying and selling, buying and selling. This is why you see in the chat, I'm like, okay, if price goes above this area, buy it. But if it fails to get that high, that is significant because the price is going to for sure fall back down if it can't reach that price. So instead of so much giving out exact target numbers, whether it be a stop loss, take profit, or whatever, I try to give you guys more understanding with explaining what I am looking for. And basically just how the market works in general. It goes to a high point. If it can't break it, it has no choice but to go back down, as we see right here. Here was its high. Let me do that with a highlighter. Here was the high in the market. The market went to go test the low, which was here. Actually, we'll say here. Market came back to test its low. It could not break this area either, so it had no choice but to go back up. Could not break this area again, so it had no choice to go back down. Could not break this area, so boom, we're going back up. If you see that this is a repeated cycle, and it just happens over and over and over until it's time for the market to break out of the zone. Now, we can call this a sleeping alligator as well, because we see the little humps in the back, and we already know once the alligator, here go the little tail. It's an ugly alligator, but we already know once this alligator wakes up, or once the market stops moving sideways, then we're gonna get an impulse of movement. Now, it's hard to see where the market is going during consolidation. This is why you want to kind of just wait and see where it shows interest in going. Since we're not getting a break above 23.39 or that 20.40, if we don't see the candles go higher than that, or we don't see the candles go lower than 23.18, really it's around 16. We can't say that the market is having momentum going either way. It's truly just staying in between the lines, bouncing sideways, up and down, up and down. So currently, though we can certainly make profit out of the market being in consolidation, we want to be totally aware of what's happening, and we want to look forward to the breaks in the market. So this rising, as I was saying, the market did get to 335. But if you didn't understand that the market was in consolidation and to pull, when you saw that it couldn't surpass that TP level of 2340, then you could be you could be in some trouble there. Not if your lot size is, where it's supposed to be. It wouldn't matter so much. It'll just be a little tap on the chin and a little loss. But I saw it clearly that the market, we have to break this 23.40 area. And what I did was I waited until on a 30-minute time frame. I waited. You can see clearly here in New York at 8 a.m. Once I saw a sell candle start closing below the previous sell candle, I realized that more than likely it was solidified that this was the resistance, still the resistance, because it's been bouncing back and forth, and that the market was going to fall down. Now, how low it was going to go, I didn't know until it started to stutter and kind of stall out at the support level around 23.20, 23.18. So I was able to pull that trigger knowing that the market was in consolidation, but it was also convenient to know that I could still make money off of this move. I just couldn't get too attached to the sale because we were in consolidation. It was more like a scalp sale, I would say, but it was a pretty nice scalp sale. So once I saw that the market broke the 30-minute candle, and I decided to go ahead and sell with a tight stop loss over the previous candle. So just so you can see that visually, put my stop loss here, make that red, put my stop loss here, right when I saw this candle close below the previous candle. So top loss was pretty tight here on the consolidating market. Just to take it here. And once I saw a rejection, when I saw the market reject here, it gave me a clear indication that I should go ahead and get out. Every time you see the market reject a certain price or a certain area, if you saw it do it previously, more than likely it's going to do it before. And let me explain that. Say, for instance, here, the market rejected and it went up, right? So when it came back down, I'll say you have a higher probability of the market rejecting again and doing what it did previously before, over just continuing and fall down. If it rejected before, more than likely it's going to reject again. And this is how the support level is validated. Same with the resistance. It's just the opposite way. The support, the resistance or the ceiling would be validated by a wick poking out the other side like this. So boom, boom. That's how you know when to get out. You know when to get out. You can use indicators as well. MACDs work great for signaling when to close or when the momentum slows down. But candlesticks for me over everything. You always want to pay attention to the candlesticks. Number one, the bigger the candlesticks, the more momentum. Definitely take note of that. When you see big candlesticks, especially a bigger candlestick, a candlestick bigger than the previous candlestick going in a different direction, we can see that the momentum is picking up, right? When you see candlesticks with small wicks to no wicks, we can assume that the market is gaining momentum in whatever direction the candlestick is moving. For instance, there's no wick here and the market gained momentum going up. So pay attention to the candlesticks. Are they, what color are they? Or over the color, are they going up or are they going down? Does it have a wick on it? Does it have a small wick, a long wick? Also, how big are the candles? Are they small candles or are they long, thick, massive candles? So for instance, we see here very small candles, which indicates the momentum is stalling, is slowing down. The market is deciding what it's going to do instead of going ahead and doing so. So keep that in mind. Candlesticks are very important and very simple to learn over a MACD crossing, green line, doing your settings correctly, price action, rules. Price action is king. Price action is queen, if you ask me. So this is what we're looking at. So overall, even for tomorrow, we need price to break these areas in order to go anywhere further than here. All right. So the next thing I would do, but I would be looking for volume. I would go to a bigger time frame and look for volume. So what is volume? Volume is just one or two candlesticks, either massive candlesticks like this one. This is a volume candle. Either a massive candlestick like this or several candlesticks going in the same direction massively. So this would be volume. You would want them back to back, like it's 3 candles in a row. That's volume. This one big candle is volume. Even these 2 brown candles are volume as well. So we want to look for volume. We want to see, is the volume on the upside or the downside? Funny thing is with a lot of the pairs of the trades, we see volume on both sides. That's why it's so important to just wait until the market shows interest in what side it's going to go instead of sticking in the middle. Like even on the monthly time frame, we see that we have this indecisive candle here, which gives us no clue of what's pretty much going to happen. All that we can tell is that gold has been on an uptrend for a while. Gold is on an uptrend on the monthly time frame for sure. We'll look on a weekly time frame. We see the previous candle that's here. We see that this candle is actually bigger than the candle before it. But what we're looking for is you see our red line here, if we extend it, it'll go right over that candle, right? And maybe if we put this line here, we can get a little bit better insight. Actually, we're gonna go to this supported area here so we can get a little bit more insight. So if the market pushes above 2340, then comes back to test this area and validate it as support, meaning it comes back, it goes up, shows interest. Let me show what it might look like. It shows interest, boop, like a little peak up. Then it trades back inside of the zone somewhere. Then let's say it bounces around. Kind of just, this is the market consolidating, kind of bounce around here, but it does not break and go lower. It decides to solidify that as support and then go back and try to take out this high, right? But the market has to hold above this area for us to be able to catch the volume until 2450, all right? Now, on the upside, on the downside wave, see, how did I mark that up on the daily? Okay. For the downside, let's look to our left. We have plenty of volume here, right? Plenty of volume. So let me I'm gonna put this as a TP zone for here. Put it on here green. And we're gonna put it down here as a TP zone. Capturing all of this volume here. So what we'll be looking for the downside, what I would be looking for, is the market. See a little interest here, it broke, but same here. See the market, we want to see the market come down. However far, we never know how far it comes down before it goes back to retest. Come down, retest this area, stall out potentially to see if it's, a good area to be the new ceiling. And then we want the market to come down here. So these are two different perspectives. And again, in order for any of these ideas to work, the market needs to hold different levels. The market needs to hold below 2286 in order for it to continue to go down and catch 2193. The market needs to hold above 2340 to go ahead and catch higher areas like 2375 to 2450. And I'm saying that 2375 because I'm seeing the market, boom, keep falling from this area, and it failed to get to that area on that time. So, we would really love for it to go to the 2450, but you want to break it down and not miss out on any money. I wouldn't say trying to be greedy, but overlooking a closer TP, I would say. So boom, boom. That's that. I'm gonna erase all of these things. And you see how clearly the market has just been consolidating. Boop, 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 boop. And we're looking for a break to the downside, clearly. Boom. We might get us, as you see here, the market stalled out. So say for instance, the market broke, validated this area as its new resistance. And these are all just assumptions because, we don't have enough proof to tell what the market is going besides the fact that it's been on the uptrend. So we got a supported level here. And since the market stepped here, we can make this a zone here. And then we can also make this a zone here. Since the market kind of bounced around in this area. So even all the way to here. And for the upside, our zone will be here. A little bit. Yep. That's the highest it's ever been. So on my charts. So that's what it'll be looking like. But you can see clearly we are in consolidation, right? So that's gold. That's gold, that's gold, that's gold. We're gonna take a look at Bitcoin, which is also one of my favorite pairs to trade. Bitcoin, my chart looks crazy right now. The chart looks crazy. And this is following the chart from, I don't know, days ago. But I can erase it. Because we have the notes already. So on the daily time frame, but always look at the higher time frame to start. On the daily time frame, we pay attention, we see that yesterday's candle rejected around 64,000. Let's just round it up to around 64K. It rejected that zone. And now we're going back to test potentially the low of yesterday's candle to around that 61K area, or even, even lower to 60 or 58. We will have to go to a smaller time frame to see. But we see right now that Bitcoin overall, it got to a high of 71, 73. And just to break it all the way down from the high of the year, we were here. The market traded down. It came back to try to take out this high at 74. It failed. Every time the market fails to take out a high, it actually falls lower than it fell previously. So the market fell even lower here to around 56K. So we're gonna mark that right there. We're gonna mark that 56K, being that that's our cutoff point. So our support, our cutoff. All right. So the market fell to 56K. And then we attempt once more to take out this high. We see that the market didn't get quite to that level, and start trading back down. And once we did that, I see some people will call this a double top or M shape. And all that is you wait for a break. Let's say you wait for a break here, just to carry the market down. If I remember that correctly. I don't really use so many patterns, to be honest, but I see them. I see them for sure. So with a double top or M pattern, you would be looking to sell the market. And it was pretty clean. It's pretty clean. So, but again, we noticed that the market failed to break these highs, so it had to go down. Now, I just said that the market, if it cannot break its previous high, it trades down lower, which is accurate. But me saying that it happens every time is not so valid. Only because when the market decides it wants to turn around and reverse, it won't get lower than its previous fall. So I'm saying that because I'm seeing now that, okay, we got the M shape, the market fell down, but we somehow found this area right here is some kind of version of support. I'm gonna draw a rectangle. And I'm saying this because the market hit a few times. It hit here, came back, it pulled up, came all the way back here, came back here again. Again, every time it gets to this above this level, it pops back up. So it's obviously very significant. Currently, the market could now be going back to test this level, or again, like I said, just be testing this previous daily candle, and holding this level. We need more time to see. We definitely need more time to see. So right now, this area is acting as a support level, and this area is acting as a resistance. But we already know if either area breaks, we have new target destinations and locations. But we're in consolidation right now as well with Bitcoin. We're consolidating. Sure, we're still consolidating for sure. But what we do see clearly is that this previous candle rejected 64,000. So we are coming down to find an area that will support price to either bounce back up or find an area where price will crash through it. The market will go to an area where the bulls can no longer hold the market and continue to trade down. And again, we're looking to hold above this level currently because it's the last area the market bounced up from. So this area and this area, more specifically, this box, we want the market to hold above. So I'm gonna draw out my fib on this. So we can see the market is above or below the 50%. So again, like even looking at the Fibonacci I just drew on the daily time frame, we see the high is here at the 72, which I low key want to make the real high. Put it on the real high, which is 73.86 2 days. Let's mark the 73K high. Okay, with that being marked up, you see the market is still holding below the blue line, which is this 50% area at $65,141. I've been preaching and preaching and preaching. When the market is above the 50%, we can expect to buy. When the market is below 50%, you have a higher probability that the market is going to sell down. And we see here that the market sold down. Now you want to look to make sure the candles are closed and finished before you make this decision of buying or selling. Because sometimes you can get something like this, like a wick, and that's not an official close of above or below. Well, actually, this candle did close below, in the golden. But you want a more decisive candle sometimes, just so you can get a little bit more confidence to make a decision. So we're under the 50%, so we have a more probability of winning the trade and profit if we sell because we're below the 50%. I'm also saying that we're at the 382 level. We haven't really surpassed it. We're kind of just lingering on this level right here, consolidating on this level. So that's something to take note of because this is a pretty strong rejection zone. And so far we haven't seen, haven't seen a rejection like right at this line. We're seeing rejection at our stop loss area, but not currently at this line. Still like on the fence, bouncing back and forth, up and down. We want it to stay closed below the line in order to continue to sell it down to this next location of around 60,000, 60,600. Okay. So that's what we're looking at for Bitcoin. We need her to close below 63K to continue to sell to 60,500, or we need to see a close above this 50%, I'll say, to carry the market to see her climb a little bit further. Now, just because crypto is so volatile, I would wait until I see crazy momentum push. Talking about crazy momentum push in a direction, and wait for the market to break the previous high, which says 73,862. I will wait for, that momentum to kick in, push, retest, and then get in for the buy. But that's just me personally, because I'm more into holding crypto than trading it live and forex. It has to be a really, really great trade. Like the sell from 73K to 56. That's a beautiful trade. Just to throw that out there. So that's BTC. Gold. Check out something for London. The London session, Euro or GPJ PLC or USD Chef. Low of the year. No. Been looking at GJ and how it's had so much momentum this year, just going up, 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 up. It hasn't even took a break going up, to be honest. It's been going up pretty much all year. You can see from the 50% here, starting January 1st, 2024, just up, 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 a whole lot of motion. So, in my mind, I'm looking forward for it to uh, top out eventually. That makes sense. Um, and around my 786 zone around this board, I'm wondering, I'm looking to see, uh, because I see that this is a crazy fall. It was a crazy, crazy volume, crazy rejection zone right here. Market traded in and just fell down. And I'm looking forward to see what happens if it's gonna respect this high and potentially fall down again, from it. So, but I'm just waiting for now for it to trade in the zone to come back down. Let's see what we got on the page for GBP, JPY. Nothing today. So on the 4th, we got some things popping with GBP. Um, and CHF, it gives me the indication of the thought to just kind of hold off on it and just kind of watch it. A good thing to know what to do is look at the news for the whole week. Don't always just look at it for the day. Because since we know that when the news drops, there's heavy motion in the market and that we can capitalize on it. Sometimes when we see something consolidating crazy, like say for instance, we see gold consolidating. A lot of the markets are consolidating because it's NFP. It's July 1st, so the markets are, uh, let's say, how do I say this? Balancing the books. That's what I say. Let's just say like uh, prices balancing out for the month, and we just started a new month, and we'll have more than likely we'll have different results from last month. So the price is balancing out. And it's smart to go ahead and look at the news for the rest of the week because you can kind of make an educated guess of when the momentum will kick in. Like how we see today, Monday, Euro probably had a volatile chart. USD 10 a.m. A lot of the 10 a.m. news action isn't so effective, in my opinion. I usually read, when I see a red folder, I see what the red folder is about. So for instance, ISM manufacturing PMI, I really hardly ever see the market retaliate so much from these articles right here, like PMI, manufactured prices. So I don't really worry about so much of being nervous or scared when these folders drop because they're very small impact for me, even though that they're red. And we see that the forecast was 49.2 and then the actuals was 48.1. They're very close. When you see these way off, that's when the market has crazy momentum. When you see the prices totally off. So let's see if I can find an example. I'll find one. Now let's go. We have to go to the past. Let's see. Mm. Okay, let's say for instance, this new home sale forecast was 63K and that was 619. So I would expect the USD to go down because that was pretty drastic of a switch from 636 to 619. Also 2.6 from 3.6 million. That's a pretty big um difference in prices and percentages. So that's what I kind of look for when I check the news. I check even if it's a red folder, it's not always to me, it's gonna be so effective. I feel like the red folders are sometimes to intimidate you. But if you know what these red folders mean and what's going to actually happen and what fluctuates the market and what doesn't, you're not going to be so intimidated. So, for instance, like CPI, a lot of the times it creates huge fluctuation in the US market. I'm not sure about the euro. When Fed Chair Powell speaks, it creates a big fluctuation in the market when any of the presidents speaks. So since I know that, it's almost like, oh, okay, 9:30. Instead of me going so hard trading on Monday when I know the market was kind of consolidating, moving slow, maybe I should wait to Tuesday or even Wednesday, because Wednesday we have another folder at 8:15, unemployment claims. From my understanding and my experience, most times when we have the unemployment claims folder, the market is very liquid. There's a lot of money to grab in the market. If you are consciously aware and you did your studying and your charting, uh, and you're ready to shoot when it's time to shoot, um, it's very effective to trade on unemployment claims days, just because the market is very liquid and you can grab a whole lot in minutes. These are these 800 pip days, 400 pip days, things like that, on the unemployment claims from my experience. Now, when it comes Wednesday, like super, the market only won't move 20 pips. I don't control the market. I'm just saying from my experience on the unemployment claim days, and non-farm employment change, ADP, things are like that. I see a lot of movement in the market, a lot of opportunity. So again, I was just saying this to check the photo for the week, just so you don't try to trade on Thursday. Some people, like, oh man, I wasn't funded up Monday and Tuesday. And you load your account up on Wednesday and you're so ready to trade. You did your studies and somehow you can't enter a trade. It's because you weren't focusing and paying attention, and checking the news ahead of the time and understanding that we have a bank holiday on July 4th, sorry, for USD. So, and then check again what's going on Friday. Friday, we got tons of red folders for USD. We got USD folders for CAD. So, and again, unemployment rates, non-farm employment change. I found these red folders highly profitable. All right. So, and it's not that hard to click through it because, Saturday, Sunday, market closed. So, if you trade in crypto, uh, yeah, I mean, we know market opens at 5:36, argumentatively. Um, but yeah, those are the few things I'm looking at. I'm also looking at an idea on NZD USD. Um, they more swing trades, to be honest. Swing trades. This NZD USD has been swinging for a very long time. So here's it clearly. But the market almost, went to its desired area. But it traded back down, never hit stop loss, literally traded right back down to entry, to go to this level here, which is, it took out this high, went a little higher, but now it's going to retest the 50% level or maybe even the 382. But more than likely, we're going to test inside of this box. Test inside this box. And then, fingers crossed with news, we can go ahead and hit our target here at around 65. So a lot of these ideas, you know, you gotta wait for them. Can't always just jump in. The trades are not ready yet. I mean, you can get in and just hold it and be in drawdown if you want. If you're somebody who's not so worried about numbers and your screen being red for a while, but if you are and you want to practice on your timing and getting in, you can't say, you know, can't always catch that perfect sniper entry, but if you want to decrease your drawdown, I would say look for areas where the market returns to and wait till the market gets there to make your decision or to pull the trigger. You can have your decision already made that you want to buy or sell, but wait till the market gets to your supported level or your resistance level before you pull that trigger. For instance, me waiting till the market gets into this box to pull the trigger, even though it's close, even say it's close, but you know, still be patient enough to wait it out. Heard that? That's all I got. What time is it? It's 10:30. Well, almost. Either way, I'm out. I'll drop this in the chat for you guys. Yep. That's all I got. But good night, folks. Let's get the billions.